is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Serve the one you love. Once you decide to be a couple, you're there to serve the one you love, to serve your love to your lover. And every kiss and every touch you feel, you're there to please the one you love without expecting anything back. Market-wise, let's take a look at it out here. We have the Dow Industrials up 33, Nasdaq up 17, S&P's up 4.5, gold contract up $4.80, trading at $12.50 an ounce. Silver up 17 cents, $16.54 an ounce. Platinum down $2.62 at $9.25 an ounce. Copper flat at $2.60 a pound. Light sweet crude up 20 cents, $42.73 a barrel. Bottom line, folks, oil wants to head to this $40 level. We'll see how this thing works out. Bottom line, yesterday got into lows, had price spread, had volume. Bottom line, oil wants lower price. Notes and bonds, just the opposite. You get the 10-year note up one tick, 126.23. 30-year bond up two ticks, 156.18. Now, both notes and bonds, they're in confirmed ABC structures on the way up. You're talking about a price projection in the 10-year of 128.20. The 30-year, you're talking about 159.30. Right now, your 10-year is yielding 2.14%. King dollar right now just still can't catch a bid. You're up 74 ticks, 97.290. Bottom line, King dollar is making its way down in the 95 area. You get the euro trading at 111 to the U.S. dollar. The yen is at 111 also to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. Well, this is what we got out here. So this is going to get kind of intriguing. This is why. So the SPY today is up 51 cents. You're going to have anemic volume. Now, we've had anemic volume on the way down. Yesterday, you only came down 55 million shares, and you're going into 84. So that's where this bounce is coming in. That being said, what's happening now is that you only get 27 million on the way up, and you're going into 56 million. So the kicker is going to be, can the SPY hold 243.59? It hasn't got there yet, and if it doesn't hold it, guess what? That's going to set up that we'll see how this shakes, that you go get a test of the low that was established out here last week on the 16th, which would be 241.63. We take a look at the Dow Industrials. Dow Industrials set up the exact same way. Dow, we're up 32 bucks. We take a look at the volume out here. What you're going to see, we're at 471 million. You know, we came down on light volume yesterday. We did 828 million. I expect what you're going to see. You're going to see this bounce. This bounce is probably going to be 700, 710, or 25 million. That will bring your probability much higher. That we're going to go back down. We're going to try to test out lower price point. The composite, NASDAQ composite. What do we have with the composite? Composite also is higher. We're up 18 bucks. You're over the consolidation that has been in place since the downdraft 2 weeks ago Friday. And bottom line is that, you get over that, that means the composite can actually get up to the lows of the last highs that were out here. And you're talking about 62.82, which is another 30 bucks from where we are right now. The NDX 100, the 3 Qs, same type of setup inside the 3 Qs. The difference being that this is definitely an anemic volume once again. but you're over the high of the 140.93, and that sets up, guess what? You can run up to this 142.60. Notes, bonds, just don't stop. Note market out here today, you get a sideways move, it won't back off. Notes are at 126.22. You're talking about a 128.20 price projection on that on an ABC structure on the way up. Your 30-year, the 30 is intriguing because the 30-year every single day just gets to a new high. 30-year right now, you're at 156.17. The projection is 159.20. Gold contract. What do we have with gold? Gold contract out here. They trashed it coming into the 130 close. It was pretty interesting, actually. They wanted to get that under the 1450, and they did a good job doing it. Gold today traded up to the price point of 1256. Right now, you're at 1250. I want to see this thing get back inside before this close of 1252.70. With that number is the low of the 15th. We go and we take a look at the silver contract. Silver contract got to a price point today of $16.64. Right now, you're at $16.55, and you know we got a little juice in silver. Silver has a long way to go, though. So I'd like to see silver get back inside $16.70. King dollar. Now check this out. This is going to get really intriguing. So, you know, we've been talking about King dollar for a long period of time, and what is so intriguing about King dollar is that it absolutely just cannot get a bid. And this has been going on for 6 months. In particular, you know, the last time that we had a bid, meaning a counter-trend bounce, a good one, was on March 27th. You got to a low of 98,515. Then we bounced all the way up to 101. Now, that certainly, the amount of dollars that are being sold there, okay, certainly is not going to be retail or even large or decently higher funds, okay? This is a large seller that's in here. Well, I suspect we'll see who the seller is. You never know exactly who the seller is, but check this out. This is pretty cool. So our banks, now here, let's go over to the XLF for a second, okay? Because when you see how this shakes out, this is where you're going to put technical analysis together with the theory of technical analysis with the fundamental deal that's happening. But check this out. This is a trip. So the XLF has pulled back. That's pulled back in the face of the Fed raising short-term rates. Okay, so bottom line, you know, market is saying, hey, the bond's going up, short-term rates ain't going to go. But you know what's going on, folks? And this is more than likely the banks that are selling the dollars. What is happening and will happen, because it doesn't have to go through Congress, Mnuchin and the Trump administration, they're going to deregulate banks again and let them go wild. When that happens, that regulation alone, you know what it's going to unleash? $2 trillion of U.S. dollars into lending. Yeah, that's what's going on here. So the banks themselves, I expect, are the sellers, because they know that it doesn't have to go through Congress. They write it down, and those regulations, the first ones, just really, they start coming out now, but they already know what is going on. It's $2 trillion that's on this sheets right now that they can't lend. Bingo, it's going to lend. Guess what? Flood the market with dollars, folks. Stay right there. We'll come right back. Dow Industrials up 15, Dow up 27, Nasdaq up 15.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 26. NASDAQ is up 16. Let's go over to our man, Mr. Andy Heck, as we do every Tuesday and Thursday. And don't forget, folks, Andy's got an outstanding show right here at TFNN every Tuesday, Thursday, 5 to 6 Eastern Standard Time. And when you come over to our website at TFNN, you're going to see right on the front page, you go to newsletters, and Andy has 2 great newsletters. He has the Technomento Commodity Report. Now, that's a weekly newsletter. He also has the Daily Essential Equities. That is a daily newsletter. You can test drive each one of those right here, right now, absolutely free. And Andy, of course, is coming to us from Las Vegas, where it's been 117 degrees. Andy Heck, what's going on?
Not where I'm coming from.
No?
Right now it's about 70, 78 right here.
78 now. So what was it on Tuesday? Did it get up to 117?
Oh, no. It's 78 in my office here.
Oh,
it's
yeah.
still 117 outside, no question.
It is.
But I'm not even looking there. Yeah.
Wow. Yeah,
It's hot.
after you got off, I looked at it, and between you and Larry, those are the 2 highest temperatures in the country.
Yeah.
And I guess what had happened, not where you are, but where Larry happened, they couldn't the smaller planes weren't taking off because as soon as you get to
120 degrees.
Yeah, you get to 117. I didn't know this. So you get to 117, folks, and the smaller jets can't take off. And it's not because of the tarmac, it's because of the air.
Yeah.
And then if you
last Thursday, I drove to California afterwards.
Yes.
And you drive through Death Valley.
Yeah.
On Route 15.
Oh my God.
Today in Death Valley, I think the temperature's like 129.
Yeah, no, that makes sense. I've been there.
Oof.
I've been there. That's
Oof.
even on nice days, that's hot. Yeah.
Yeah, it is. So the temperature in the market's also very interesting here.
It doesn't stop.
Doesn't stop, that's for sure. I don't know where you want to start. Precious metals, oil, soft cut. There's a lot to talk about today.
Well, what was intriguing, I don't know if you just heard me, I've been a dollar bear for a long time, okay? Mm-hmm. But what just really came across the tape, well, this came across the tape simultaneously, is that I suspect it's the banks that are selling the dollar, because what's going to happen, and it's already started happening this week, is that we don't need a bill in order for the banks to get deregulated again, right? Mm-hmm. And there's a Bloomberg number, and they got the number on here, that just the deregulation of the balance sheet, right, will unleash $2 trillion U.S. dollars.
Uh-huh.
So guess what? If you were a bank and I was a bank and we knew that, what would we be doing?
Diversifying away from that and
No, it'd be-
basically lightening up.
It's a trade. It's a no-brainer. That we're going to be lending more dollars. Sell the dollars, man. There's going to be we're going to be awash in dollars.
Sure.
I mean, that's the ultimate. That's like when you had the physical. That's like
well. The bottom line is the dollar, you know, the most bearish thing. I mean, that's pretty bearish, but the most bearish, the dollar's just not going up. You know, after the Fed came out, they raised interest rates by 25 points. They said it's going to go up by another 25. That'll bring the differential between dollar and euro interest rates to 190. Next year, we're going to go up 3 times. They're going to let it roll off the balance sheet. And where is the dollar gone? It's barely gone up a big figure.
Right. And, you know,
that's bearish to me.
That's right. And what Duffy's saying, bearish. Is the $2 trillion on their balance sheet, is that retained capital? And it is. That's exactly what's going on. It's capital that they have on their balance sheet now that they will not have to have on their balance sheet, folks. I suspect it looks like, I mean, once the regulations signed, which is going to be it's going to be soon. So.
Yep.
And then that's going to get leveraged.
No question. No question. So, look, let's talk about precious metals. I like the action in gold and silver here. I think they held pretty well yesterday. I'd like to see gold get up to above 1260.
Yeah.
By Friday, by Friday's close. Silver, I'd like to see it back up near $17. But I kind of like the way they're holding here. Platinum's a dog. Palladium continues to be strong. I think palladium is going to eventually ignite platinum, because if I was an industrial user, I'd be trading my palladium for platinum right now.
Yeah, listen, I know what you're saying.
Yeah. But I mean, aside from that, I do think that gold and silver will bounce out of here, particularly because the dollar is so weak. Taking a look at crude oil. All right, I want to point out a couple of things here. Look, the trajectory of oil is lower. Yesterday, we traded to the lowest level since August 2016. We went below the 42.20 support level. We're just a little bit above there now. But I want to show you 2 charts that are telling us something about crude oil. The first one is the gasoline crack spread in August, which has rallied from $14.64 up to over $17. That's a significant move. But it's also the season for peak demand for gasoline.
Sure.
If we look at the heating oil crack spread, and that's more of a indicator to me, because we aren't in peak season for heating oil. Although this is something that's not as seasonal as gasoline, because diesel is a proxy there, jet fuel is a proxy. This crack spread has gone from $13.51 up to over $15, almost $15.20. Now, I track these things constantly, and when these things make bottoms, it tends to turn crude oil. When they make tops, it tends to turn crude oil. And what we're seeing here, if these cracks hold up, we could see some support for crude oil at current prices. Now, it might be that it wants to take a look at $40 or spike down, maybe even put up a 30 handle for a little bit. But based on what's going on in the cracks, I think we're closer to lows, very close to lows here. So I'm a scale-down buyer of crude oil, even though it looks ugly. Also, Tom, the sentiment in crude oil, it is, I mean, they ain't a bull in town.
Yeah, I understand that.
What I like here about it is the cracks, and that's all I'm really focusing on. And if you traded off the cracks over recent months, you've done pretty well. So just keep your eyes on that. I mean, look, if they start falling again, I'll change my view. But right now, looking pretty good. The other thing is that contango has been going up, which we should expect when the price is going down. But that's also a sign that the shale producers are not selling. So U.S. oil production is very turnkey these days. Let's see what happens to rig counts over the next couple of weeks. If rig counts start to flatten out, that'll also be a sign. But the U.S. is still, we're an important producer.
Don't you think they'd have to do more than flatten out? Because there's a lot of rigs now.
Has to flatten out first. You got to flatten out first and then decline. No question. But, listen, even though we're turnkey, it doesn't mean we're turnkey like a futures market. It's going to take a few weeks. It used to take 6 months or a year. Now it takes a few weeks.
Yeah.
So we'll see how that shakes out. I mean,
well, the XLE, okay, so that's the large, integrated oils.
Oh, yeah.
That broke a B point, man, and that's going a lot lower, man. So it's going to be interesting because that led.
I kind of think that oil will lead that, and it looks ugly, the XLE, but the whole oil sector here, it's just under such siege. I'm not jumping in on the short side. Let's put it that way.
Yeah, no, I get it. But I understand that you're saying that you think oil's going to lead the equities. The equities have led oil all the way down.
Yes, absolutely. Yeah. Absolutely.
Stay right there. Stay right there, folks. We got a short break. Andy and I are going to be coming right back. Dow Industrials right now are up 22. You get the Nasdaq up 15. S&Ps are up 3. Gold's up 520 at 12.51. You get silver up 17 cents, $16.55. We're going to be coming right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 22. Nasdaq's up 14. S&Ps are up 2.5. We're talking with our man, Mr. Andy Hecht. We are talking markets. We're talking commodities. And don't forget, folks, coming up 5 to 6 tonight, Andy's got a great show. Now, all the programming, folks, remember, you can get it 24 hours a day right on your cell phone. You go to TFNN.com, hit Tiger TV on the right-hand side. You're going to get some great HD quality video as well as audio. So we're talking agricultural carnage today. Oh, okay.
Oh, ugly.
Look at
All right,
that.
starting with the grain, soybeans, ugly, breaking through support. Corn, the ethanol price, gasoline, that's weighing on that sucker. Wheat is hanging in there okay. But when it comes to the soft commodities, sugar trading below 13 cents, coffee tanking, cocoa back down near the lows, cotton absolutely obliterated, more than 20 cents below the May 15th price, even the orange juice under $1.30. And I'm loving this because these things are coming a lot closer to the lows than the highs. And
so what's behind this carnage?
There's a couple of things. Number one, you're rolling from July futures. All right? All of the rolls are just about, and people are getting out of long positions. That's what I see happening. Very interesting. Across the board, I took a look at it last night.
Okay.
Open interest is going down in all of these. Let's put a sugar chart up here to look at. We'll go through them one at a time. You look at the sugar chart. We've had open interest come down a little bit over recent sessions. All right, so that shows that positions are being closed down, and the thing is rolling. Coffee. We also have open interest coming down a little bit here as the price is going down. Cocoa, boom, big decline in open interest. A lot of people have gotten out of that one. Cotton, man, that thing has been a massacre. Also, look at this, gone from 250,000 contracts to like 200,000 contracts. And the price has gone from 87.18 cents down to under 67 cents. And that happened in just about 5 weeks. Yeah. Amazing. And even the frozen concentrated orange juice, Tom, which very few people trade,
right,
that thing has come down below $1.30. So we have agricultural carnage going on here. But let's remember, we're coming close to areas of key support. You have coffee at $1.16 in September. I think it's about $1. Let's take a look at where it is in the July contract. This sucker is down at $1.13. These are pretty low prices. You got some support at 111. You got support at $1. I really favor scale down buying in these things here because the bottom line is demand for coffee, sugar, cocoa, all that. You're going to have demand here, and at lower prices, demand is going to increase, and inventories are going to start to fall.
Well, it seems this is kind of whacked out, man. Because okay, so you have the dollar that can't move.
Right.
The bottom line, folks, I could understand pretty clearly, if the dollar is going up, how these commodities would go down. But the dollar hasn't moved, and these commodities are going to get killed. And just as Duffy's saying, I mean, we're talking about heavy deflation here. So
yeah. I mean, this is going to affect food prices, no question. Or profits will go up. The bottom line, it kind of feeds the stock market because the cost of goods sold is going down. Look at, everyone's focusing on, hey, oil's going to weigh on a lot of stock prices. And, that stock market is Teflon. You turn that thing around. The bottom line is airline stocks are going to soar. Any company that relies on energy, their cost of goods sold is going down. They're not going to lower their prices. Now you're seeing food additives going down. I don't know if they're going to lower their price. You think Starbucks is going to lower the price of a cup of coffee because coffee futures have just fallen from $1.30 down to $1.13 a pound?
No, but I guess the bigger question that I have is that if we're having are in a bout of heavy deflation, everything goes down.
Right.
So it's like, hold it, man.
Except for the stock.
Well, no, I'm just saying. I'm talking about everything. Stocks, real estate. I mean, everything. I mean, if you're in deflation, the Fed can't control deflation, folks. Deflation is one of the worst things in the world. If you think inflation's bad, it's deflation that is a killer.
Exactly. I've been thinking a lot about this stock market recently, and I wrote a couple of pieces about, hey, this is such a Teflon market. And the bottom line is we're so trained, and I'm not talking about we, listeners at TFNN. I'm just saying we as people in the United States are so trained to put our money in the stock market via 401ks and IRAs, that there is a constant flow of buying in this market.
Right.
And unless there's selling, the buying is natural, the selling is not natural. So, on a day where nothing's happening, price is going to go up. right?
Yeah, no, that's a good point. That's
Teflon, and you got a Teflon. Listen, you got stuff going on around the world here, Tom. That's insane. You got North Korea. That ain't going away anytime soon. You got the Middle East. That ain't going along. That place is a hotbed of craziness. You have problems between our country and Russia over Syria and other parts of the world. You know, the geopolitical landscape is certainly not calm. But if you look at that stock market, hey, it's myopic. It has blinders on. You know what? As long as the money flows in, it's going to go higher. Everything is beautiful. But right now, we're seeing a lot of interesting things in the commodity markets. We're seeing commodity prices in general going down. I mean, I'm looking at grains. I'm looking at energies. Natural gas, made a new low today, even though the number was around expected, 61 BCF. And you see the dollar not going anywhere.
It's going to be. Listen, man. I know. I mean,
to me, it's crazy. The action in the dollar. If you told me, hey, the Fed was going to come out and be really hawkish, I'd say, ooh, the dollar probably go back to around 99 to 100. This thing hasn't even been able to go above 97.5.
Oh yeah, I can tell you though. But once I understand it now. Technically. My take is that we're going lower, but I totally understand now because if you and I had a bank right now, just picture it. If we had a bank, you have to hold so much money in the balance sheet. Guess what? Whether it's tomorrow or 2 weeks from now, it's not going to be long. You don't have to hold it. So it's like, as soon as you know you don't have to hold it, man, I would have been selling dollars with.
Let me ask you, what are you buying? What are you buying?
You're selling them short, man. The banks are selling them short. Why not?
I understand selling it, but you're selling the dollar short. What are you buying against it? You buying euros? You buying yen?
Well, you could, yeah, you could buy euros because the banks already know. Our U.S. banks know that they're not going to have to keep so much on their balance sheet, which they have to do now, and that gets removed. So they're gonna know that as soon as it gets removed, it goes into the marketplace, and when it goes into the marketplace, what does that mean, folks? It means that there's more supply, and we already know that the market itself, the world is awash in dollars right now. You can just tell by the interest rate structure, okay? Bottom line, and now another $2 trillion are coming at you, and that $2 trillion, folks, is not leveraged. So the banks put out $2 trillion in lending, and then if you and I get the money, then guess what? We're going to leverage it up. So,
well, I'd be a little nervous to go into Europe now, but I would say that Europe is probably a better bet, a cheaper bet than the U.S. right now. I wouldn't be putting money into Australia with commodities falling apart, or Canada with oil falling apart. The UK is a basket case. Japan, it's a tough one. My question is, where do you go with it? You know what I mean?
Where do you go, baby? Well, listen, we look forward to the show at 5 o'clock, Andy.
Thanks, buddy.
Thanks so much. Stay there, folks. We're coming right back. You have the Dow Industrials right now up 9, Nasdaq up 12, S&P's up 1.5. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now is flat. You get the NASDAQ up 5. S&P's also a flat. Let's go inside the Dow because what we did have, was just a... Hey, listen, the Dow's going sideways, but that was a fast sell down in the last 3 or 4 minutes in between this break. You had the Dow go from up 40 to flat. Goldman Sachs, that's the leader on the way down. That's putting 18 negative points. Home Depot's putting 5. Walmart's putting 4. Visa's putting 3. Disney's putting 7. The winner out here inside the Dow today is the United Health. That's 9 positive points. Johnson & Johnson's 9. IBM 6. Big Mac is 6. Inside the NDX 100, what you have, the leader out here, Illumina. Illumina's up 3.3. It's a biotech. Gilead's a biotech, up 4.3. Alexa Pharmaceutical, biotech, up 2.1. Taken away from it, Costco. Costco's down an additional 2%. You have Walgreens down an additional 2%. BioMarlin, which is a biotech, down 1.7%. If we go over to the small caps, the IWM. This baby got to a high today of 140.39. Right now you're at 139.94. That looks like it wants to sell off a bit. What's going to be intriguing here is that if we do go over to the futures and look at this, what you're going to see, you're going to have a market that tried to get higher. It's going to have dramatically lighter volume, and that's going to basically set up, as when we're starting, a test of the lower end of these small consolidation up at the highs that we have. So this is going to be kind of interesting watching how this thing shakes out. If we go to take a look at the NDX 100, by the 3 Qs, right now also flat. The 3 Qs done 21 million shares. We got to a price point of 141.22. And yeah, this would be a failure. This is going to be interesting, man. Particularly because what we did yesterday, see, is this. Yesterday, the NDX went to a high, closed at a high. The composite went to a high, closed to a high. Today, thus far, you had them go over the highs, lighter volume, dramatically lighter volume, couldn't hold price, and in particular, what you do have, one of the tigers we were talking about. I believe it was just a few days ago. It was one of the first times that the market didn't hold price going into the close. And he had put up there, well, when was the last time that happened? Sarcastically, I put up 2007. That being said, though, guess what? This is only the second time that the market hasn't held going into the close, because it's normally just the opposite. That bottom line is that the market has caught a bid each and every close. And in this particular case, we haven't. Now, what's going to be intriguing is coming into a Friday in the summer, and it hasn't caught a bid. We go over to the GDX, into the gold equities. Bottom line is that this correlation went just the opposite way, meaning we're up 30 cents right now. You're at 22.41. And this had to get back inside 2209, and it did it yesterday. You know, we'll see how it's going to attack the higher end of this, which is 2342. If we go take a look at Barrick Gold, that's the largest weighting structure. I like what that baby did. It's only up 34 cents, but it got back inside this $15.86, which it had to get back inside. Newmont, we take a look at Newmont. That's the second largest weighting. That never got outside of the range, which is really positive because Newmont was the dog. That was definitely one of the dogs inside there. We take a look at Rangol Resources, which is a leader. Rangol needs a bid. It's up 41 cents. This definitely needs a bid. Now, it didn't get to the bottom of the consolidation, but it still needs a bid. Franco-Nevada is a good indication of where the metal wants to go, and Franco-Nevada is up at 73.46. Now, what's cool about Franco-Nevada is that the high of last Wednesday, that was Fed Day, is 74.59, and we're right there. Franco-Nevada is going to want to tag it tomorrow. Let's go take a look at Royal Gold. Royal Gold needs a bid, too. Royal Gold's halfway through that bar, though. That's still positive. That bar being 79's the high, 75's the low. We're at 77 right now. Some of the higher volume stocks out here, let's take a look at them. In this market, it's going to be a low volume market out here. Oracle's the leader out here. That's up $4. You have Gilead's up 3. Microsoft is up 6 cents. You have Twitter up 33 cents. Pandora's up 26 cents. Micron Tech is down 8. Let's go to the SMHs. SMHs no doubt have been, yeah, so the SMHs can't make it either. So this is going to get interesting. The SMHs can't make it. Let's go to the large NDX stock. So Apple is down 8 cents right now. Couldn't handle higher price. Google is down 279. That tried to get to a high and couldn't handle it. Amazon. Yeah, this is interesting. Okay, so Amazon, let's see. Yeah, did the same thing. Microsoft. Oh, no, this is interesting. So Microsoft, yeah, Microsoft was, you know, one of the weaker ones, but now Microsoft looks like it wants to go higher. Yeah, Microsoft is game to 71, and right now you're at 70. And then Facebook. Facebook's going to give it up, too. So this is going to get an interesting day tomorrow, folks. And this would be pretty wild if, in fact, these Fridays start spilling out with some real juice. That would be very unusual. Now, the Friday that we did come down, you know, no doubt come fast and furious. That was option expiration, so I can understand that. But guess what? We'll see how this shakes out. Let's go over and take a look at Walmart. So you get Walmart fighting it out with Amazon, and what Walmart did out here this morning, folks, I don't know if it was this morning, but this news story came out this morning. They notified all their vendors, okay, is that bottom line is that they want them off. If you're a vendor of Walmart and you are on AWS, which is the Amazon cloud, they want you off the cloud. And, of course, they want you off the cloud because Walmart suspects that, you know, guess what? You're on their cloud. They can see exactly what's going on. So competitively, as they're feeding that data into computers, they want less information going to Amazon because bottom line is that Amazon, no doubt, is the king dog out there. Federal Express, let's go to FedEx. That FedEx went to a new all-time high, still at a new all-time high. Now, there's a big differential between FedEx and UPS, too. You know, UPS is at FedEx is at an all-time high, where UPS all-time high is 120, and right now you're at 109. So we'll see what the differential is and why that differential is out here. But thus far, it's FedEx is beating out UPS. And it's all about delivery. That's what it seems like. No matter, when you actually look at Amazon, it's really just a delivery service. Not just, yeah, well, it's just a delivery service. And they are the most efficient at delivery. And now it's just a matter of how many items are they going to deliver. You stay right there, folks. We'll be coming right back. Dow Industrials right now are down 7. NASDAQ is up 4. S&Ps are off 1. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is down 4. NASDAQ is up 3. S&P's flat. Bottom line, you're going to have a flat market. What you are going to have, however, is that you have a market that that tried to get to higher price, couldn't do it, got over a couple minor swings, and you're going to have dramatically lighter volume. On the NYSE right now, you're 580 million. They'll throw a couple hundred million in there, but you can see even at a couple hundred million, let's say 750. That's not even close. That's a bounce with light volume. Gave it up on price. We go take a look at the Nasdaq Composite. Or at 1.9. That's going to be the same setup because you're coming into 2.5. They'll throw some maybe 250, 300 million in the Composite. So that's still 2.3, and that's not enough juice. That would be also a failure on price and a failure on volume. If we go over to the Composite for a second here, yeah, it would be because you got over the whole consolidation. The top of that consolidation is 62.43. We're at 62.37 right now. Now, if we close right here, bottom line in the Composite, that actually would still be a toss-up whether that's a failure. And the reason being is that 62.37.53 was the high of the 14th. You know, see what, if you close over that, guess what? It's Friday. You're going to go after it again. You close under that, you know, just a bit, and bottom line, then it's just the opposite. It's subtle. The whole thing is subtle. There's no doubt about that. Now, inside the NDX 100, different ballgame. The NDX 100, let's see, 140.93. Yeah, 140.93 would be the number. Now, if we got into 140.59 under that, then you'd have something that would be a lot bearish, a lot more bearish. Let's go take a look at Great Panther, one of the tigers out here. Great Panther trading 114. Bottom line is that needs a bid. You know, out here today, yeah, it's rejecting lower price, has light volume, but this needs a bid. And specifically what that means, folks, you've been bouncing along this bottom since the 27th of April. And yeah, you can have no sellers, but now you need buyers. And Great Panther certainly does need a buyer to come into it. It's going back into its strength, and you know, it's back with tremendously lighter volume. But that being said, they need a bid. We go take a look at McEwen Mining, MUX. MUX out here. Got a slight bid out here today. So that's off the bottom a little. Vista Gold, VGZ, that needs a bid also. That's laying down there at 82. We take a look at Anico Eagle, AEM. AEM got a pop out here today. Gold Corp. Gold Corp got a little pop. That's going to be interesting. You know, as some of these that had been weak, you know, Gold Corp seems to be getting a little more juice. We'll see whether it can keep it going. We go to the South African equities. You go over to Harmony. We'll see whether that's Harmony's trying to make a bottom out here today. Let's go to Harmony in South Africa, actually. We'll take a look at that. Same setup, exact same setup. So in South Africa, it tested its lows. Now the bottom line is that you need a sign of strength. Goldfields, GFI. Oh, Goldfields got some action happening. Okay, so you know Goldfields never made it to its swing low. That's positive, no doubt. And we'll finish this hour out with good old King Dollar. And King Dollar, folks, bottom line wants lower price. So this is going to be wild watching this thing shake out. Now, what how it happened, and Tommy and I were talking about this morning on 10 o'clock show at 10 o'clock. This is really dangerous now because King Dollar got volume but didn't even come close to getting price. That means that, yeah, you got the buyers, man, and a seller is just sitting there saying, I'll give you as many dollars as you want all day long. You stay right there, folks. We'll be coming back with some numbers after the close. We have the Dow Industrials down 13. NASDAQ is up 2. S&Ps are off 1.5. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had a pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best, but don't overdo. This is an important card. Always do your best, but don't overdo. When you overdo, you deplete your body and you go against yourself, and it will take longer to accomplish your goal. Yesterday's gone, tomorrow's not here. What are you doing right now? Play the long ball game, folks. It's where it's at. Market-wise, let's take a look at it out here. We had the Dow Industrials down 12, NASDAQ up 2, S&P's down 2.5, gold contract up $5, trading at $12.50 an ounce. Silver up 16 cents, $16.53 an ounce. Platinum down $3 at $9.24 an ounce. Copper flat, $2.60 a pound. Light sweet crude up 21 cents, $42.74 a barrel. Bottom line, folks, oil went south once again yesterday. Had wide price spread, had volume, wants lower price. Bonds, 10-year note up 1 tick, 126.22. 30-year bond up 3 ticks, 156.19. Both notes and bonds continue to want higher price, lower yield. King dollar. King dollar just can't catch a bid. Up 44 ticks, $97.26. Bottom line, King dollar's building cause, folks, to get down into the aspect about the 95 area. Now, what's really intriguing, I was talking about this last hour, is that, you know, King dollar, folks, has not caught a bid since 103, January 3rd. And the correlation, technically, you know, bottom line, looks to me like it wants to go to 95. In fact, if I bring it up, I'm going to show you here, when we broke back inside the 100.600 mark, what you're going to see, that was a, you couldn't bust them up. It broke out. It broke out of this long consolidation that it had been in. The consolidation that we were talking about goes all the way back to March of 2015. It broke out in the election in November, went topside big time, broke back inside, and the first time it came down was in February. It actually broke down with conviction, though, the week of May 19th. Now, so check this out. This is pretty wild. So when you can't break up, can't break out, you break down. Bottom line, can't bust them up, you bust them down, right? So the lower end of this consolidation, folks, is 91. The election night is 95.905. So technically, it's like, okay, this wants to go there. Fundamentally, though, it was kind of hard wrapping my head around this. Okay, why is it going there? You have the Federal Reserve going up on short-term rates. Fundamentally, if you're a textbook, you know, MIT, Harvard, Stanford, or any of these great schools, you look and say, okay, short-term rates going up, dollar's going to get stronger, right? Bonds are going to go down. Well, just the opposite has happened. But check this out. This is what's going on. I suspect. This is the theory. The deregulation. So the administration is going to deregulate the banks and let them go wild again, which is just a total mind blower, which is not good for you and I. But bottom line, that's what's happening. They can let this happen without a law. So what they're doing is it's just rewriting regulations. Okay, Mnuchin and Cohen, they're rewriting all the regulations. Factually, what that does immediately is this, is that it's going to release $2 trillion, U.S. dollars, this is, off the bank's balance sheet that they're going to be able to lend out. So they lend that out, and then, of course, you and I will borrow it, and then we'll leverage it up. Well, when I was looking at this, I says, no wonder why the dollar's not going up. Because what happens is that the banks are selling it short because they know that they're going to basically be pushing more money out because the regulation right now stops them from, you need more money in your balance sheet. It stops them. So I talked about this last hour. Now you want more, this is as you build cases, if you're a fundamentalist, you have to build a case. That's the bottom line. So as you build this case, as I'm building this case, what just happened in the break is this. So listen to this. This is amazing. The banks, the more that I keep looking at this, the banks are the deal. So I'm going to pull this over here, and this is amazing. So, and in that case, you know, you're talking about all the commodities have been coming down, deflation, all of the above. Well, today we had a $5 billion 30-year Treasury inflated, inflation-protected securities. That's TIPS, okay? So TIPS, folks, the Treasury sells them. You know, you buy TIPS if you think inflation is coming. Well, you have primary dealers, and the primary dealers are the banks. So let me read this for you, because this is really wild. Thursday's $5 billion sale of 30-year Treasury inflated protected securities drew a yield of 0.88. That's 0.88 of 1%, okay? Primary dealers, which are obligated to bid, took only 15.5%. So the primary dealers, number one, have to bid. That's because they're a primary dealer. It's a kind of a license. It's a license to print money also. But they have to bid, but there's probably a certain amount they have to bid. Well, the banks, folks, took the least amount that they've ever taken going back to 2010. Okay, so the banks are saying, hey, what? There's not going to be any inflation here. Because why? Because they know they're going to be bottom line. We're flooding cash right now, and things are going down rather than up. That's the first part. Now, the second part gets really bizarre, and this is what it is. This is where there's still plenty of people that think we're going to be in an inflationary era, including the Fed. The bid-to-cover ratio was 2.83. Now, that means $2.83 are going after every dollar of this Treasury inflated protected security. And it wasn't the banks that wanted it. Guess what? They're called indirect bidders. And indirect bidders are the pension funds and mutual funds. They bought it all. Okay? The direct bidders that, you know, could be you and me. You can do this at the Treasury. That was 8.4%. You know, and if you didn't, so let me just go through that again. So what you have is this: the bankers, who, no doubt, that's their business. They know more than anyone. They didn't want them. They bid the least amount. The mutual funds, that's where the whole ETF structure comes in. People coming in saying they bought them. Bottom line, guess what? You go to the Fed Fund futures rate. The Fed Fund futures rate is saying that they're not going to. It doesn't go over 50% until March 21st of 2018. These rates aren't going anywhere but down, folks. You stay right there. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished down 12, NASDAQ up 2, S&P's up 1.5. Let's go over to our man, Mr. John Logan. And, of course, John's got a great piece of software, the TAS Market Scanner. John Logan, what's going on?
Hey, man, good to be back with you.
It's a beautiful thing, man. Thank you so much, man. How you been?
Doing all right. Just got inundated with work and been in the laboratory, so to speak.
Oh, man, we get some stuff, folks, that you're going to see out in here in the next couple of weeks. John's not only been in the laboratory, man, he's come up with some, the scanner itself has always been great.
Thanks.
You'll see the upgrades, folks, and it's just absolutely amazing. There's no doubt, man. I don't know how, well, I know how you do it. You work 20 hours a day. No doubt, right? So,
Trying
hey,
to get
listen.
back down there to see you.
That's a beautiful thing. You know, I was talking to Andy in the first hour, man. It's pretty wild, man. These commodities got killed out here. And I don't know if you just heard me. I was just talking about the dollar again and the aspect that it can't catch a bid. And it's like, I'm trying to figure out, like, what the heck's going on out here that it seems like our food prices are going down, man. You know? So it's...
Hello, Amazon.
Yeah, I know. That's a fact, man, right?
I know. Man, it's wacky world. And I understand what you're saying, but I'm just kind of looking at the treasuries. There's just I don't see anything wrong with going long the treasuries for some reason.
There's no doubt. Well, I just brought up, John. So this is amazing, folks. Okay, this is so they had the tip auction today, right?
Uh-huh.
And what happens, folks, is that and inside the tip auction, the banks have to bid. The primary market, they have to bid. But what ended up happening is that the banks bid the least amount that they've bid since 2010, John. Okay? So they're not looking for inflation. And on top of that, there was an article that went across Bloomberg a little bit earlier today. And I thought this was great because technically, I felt that the dollar's going lower, but fundamentally, so bank deregulation, of course, doesn't have to go through Congress. Mnuchin's just going to sign it. Well, as soon as that gets signed, $2 trillion on U.S. banks' balance sheets can get lent out. So it's like, wouldn't it be nice, us knowing that, you just keep selling dollars short? What difference does it make? Because you're going to lend them out. Here you go. Here's all the dollars you want, man. Right?
I know. All things considered, what do you think that should do to treasuries, though?
Listen.
Well,
there's more dollars. That's going to bring treasuries even lower. It's going to bring them higher price, lower, because there's too many dollars already. You know what I'm saying?
Right. And you know I always try to find what's the easier trade out there. I'm terrified to go long the S&Ps or short the S&Ps right now.
Right.
And we're just trying to find, okay, how do we make this easy on ourselves? And it just, man, I mean, the 30 year's breaking out again.
It is breaking out again. And
I mean, yeah, I mean, so it's hard to fight that with all these darts on the board as far as the Fed and everything. I'm sure you've been talking about this till you're blue in the face, but what's the easier trade? Unfortunately, it's pretty easy to, fortunately, it's pretty easy to get along the treasuries right now.
Which sounds insane, but
I know. That's the insane part.
I totally agree. There's no doubt, man. And what you have, so Argentina, right? This is really bizarre, folks. Argentina turned around on Tuesday. Now they've defaulted on their debt 8 times in the last 75 years. They only got back in the market last year. They floated $275 billion. No, $275 billion. Yeah.
I was going to say millions, like
a billion.
Rounding error these days.
$275 billion, 100-year bond, perpetual bond, 100-year bond, folks, and they only had to pay 7.9%.
What in the world?
That says it, man. Wouldn't it be nice if we could do that?
I know.
Hey, listen, I gotta love it. I could swap gears on you right now with all these tigers and tigresses in the den. I can't do that just yet for you.
Okay.
So, yeah, treasuries want to go higher. Your profiles, man, are so powerful. The bottom line is that and John's talking about many times, folks, they keep you on the right side of the market. Let's put it this way. Yeah. I was looking, even when the NASDAQ took the tank, man, the bottom line, it never broke anything that was long-term.
Not really. I mean, that's kind of healthy. I'm sure you might have talked about that too. When we have a kind of a big parabolic kind of tranche that it's been on, I mean, it's going to do these breaks, but, when it kind of does these breaks, and I mean, washes some short-term guys out. I mean, and when it kind of starts getting back on its horse again, it's really pretty powerful to say for the longs, really.
Yeah.
So it's not obviously making as high as now as I guess the S&P's on a relative scale, but man, that thing just blew a gasket for a while, and I don't really see. I mean, there's some resistance around 5,800 here, but I mean, it's again, how do you go long or go short these things? That's kind of the scary trade. I mean, the easier trade is just kind of look to the treasuries, and it seems like it's just going to beat people in the head on the short side again. I mean, there's a massive hole that the 30-year is actually kind of getting into now, and so many people, I would assume, the Fed rate hikes and all that kind of jazz. I mean, a lot of people probably on the wrong side of that trade right now still.
Listen, I'm glad that I was on the wrong side of that trade like about 8 years ago, because
you learned your lesson
I'm
early.
Totally serious, folks, because, the Treasury is the one thing that I'm telling you, you cannot be a fundamentalist inside the Treasury.
No.
Don't even try, because, I was convinced like anyone else that, these things got to go up. Well, then I realized that they didn't go up. Okay, I closed it and went on the other side, and then it's like, I find it still really bizarre, but I find it.
Hey, go ahead. Sorry.
No, I think the aspect is there's just so much cash in the world that, like, when we take a look at these interest rates across the world, folks, okay, it makes 0 sense to me that France can borrow at 10 years at 0.5%. And why are we paying 4 times that? We're paying 2.1, right? It's like, that doesn't make much sense to me. Germany's at 0.2%. So we're paying 10 times the amount. 10. No, 9, because it's 2.4. We're paying 9 times the amount Germany. That's 900%, by the way, folks. 900. Like, does that make any sense?
Yeah, and that area you talked about, what was it, 8 years ago?
Yes.
Is that what you were? Yeah.
Yeah.
That taught me the biggest lesson ever in trading. And I've just, things on their highs can go higher and things on their lows can go lower no matter what.
Yeah.
And, so it was, I'm trying to grab something positive out of getting hurt on the bonds 8 years ago.
For sure. Yeah. Listen, I mean, there's no doubt. There's no doubt, man. Yeah. Go ahead.
So, have you been keeping up with? I know you've been keeping up with gold.
Oh yeah.
What's
to me, what we need right now, I need a bid. I need a bid in gold. I like what happened today. Here, just stay there, okay?
Okay.
Awesome.
Okay.
You stay right there, folks. John, Logan, myself, we're coming right back. Our phone number is 877-927-6648. You have the Dow Industrials closed down 12. NASDAQ was up 2. S&P's down $1.50. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Gerald Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Talking to our man, Mr. John Logan. We are talking markets, and right now we are talking gold. So, the way that gold's been trading, John, it seems it's been teasing us for quite a while. It got up to this high on the 6th of 1298, just missed the swing point of 1300, and gave it back in spades. Then we had, of course, the Fed. Last Wednesday, gold went from 1284 to 1259. Now, I like what it did, meaning coming against its strength from the 17th, which is 1240. So I guess, we'll see whether it can catch a bid now,
Yeah, I mean, it seems to me that it's kind of, on a long-term basis, spinning, kind of gaining some potential energy to actually move higher. 35 to 40, 41. That's a real big support area in my mind.
Okay.
And then today, you actually kind of were able to raise the bar a little bit, in my opinion. 1245, 1246 is kind of a new daily profile after we kind of got off that weekly low.
Okay.
We were able to kind of ratchet up a little bit. First time we've had a new profile actually on the daily in, wow, since blah, 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 pretty good ways. So
that's good news. Okay.
Yeah. So you've got kind of a new stake in the ground, a little bit higher kind of after you kind of got off that weekly low.
Yeah.
And I think you can play defense pretty well here for a pretty good risk reward trade. I'm not saying it's going to just leave the barn and never look back.
Right.
You got a trading opportunity that's kind of formed down here, and I think it's worth 10 or 15, 20 points maybe.
Yeah. So what happens, folks, when John talks on a profile, the new profile being made, it means that, it's support. It's minus support. It's not going to be big support because we're talking on a daily now. But the bottom line is that that's good news, particularly because we haven't got one in a long period of time. So.
Yes.
Now, the Psycho Silver. I know, man. I'm telling you. Silver's a whole different animal, man. It really is.
I keep watching the commercial. I have them on replay. I keep just to make me feel better about possibly getting long silver. I watch those commercials on CNBC every once in a while. Say, silver's going to 200. Oh God, when's that going to happen?
Yeah, no. The silver market, folks, is highly volatile. Meaning up and down like in a heartbeat.
Silver put a stake in the ground today too. It was kind of wild. Okay. Yeah. So I mean, you got a little bit of a chance to play defense there on a little bit of a long trade. So that's not the end of the world. Yeah. Hey, listen, are you buying any long-term kind of leap style puts on Amazon, like for that 1 day? Hey, we're gonna bust this baby up kind of trade. I mean,
that's it. Let's bring up the options. It's a great point. What John's saying, folks, okay, is that Amazon's taken over the world, and it's very well could be just what day the FTC decides that, okay, enough's enough, and what that would be, folks, okay? Supposedly, this administration wants less regulations, but the reality is that this is a corporate fight, so there's going to be lots of soft money going into a lot of campaigns saying, hey, you got to stop Amazon, and they're putting everyone out of business.
Yeah, but I mean, it could be, the sum of the parts is more than the whole. Which I think that's happened before, obviously. But, in the short term, just that moment, I mean, it could be just for a day or two or three.
Oh, yeah. Oh.
It could be like a 200-point cave-in,
And Amazon likes to trade like that. I've told the audience so many times, I've tried to buy, in the last, let's say 4 or 5 years, I wanted to buy Amazon twice for sure. And every time that it comes down, John, it comes down so fast and furious. I'm not buying that thing, man. That thing's going to just keep going. Seriously, do you know what I mean? And guess what? It turns around, folks. But when that comes down, it's vicious. I mean, you think it's never going to stop. I'll show you. Yeah. So the last big one was what was that? October of 2016. In 4 weeks, it went from 845 down to 710. The prior one, like this one, the prior one in December of 2015, it went from 684, and eight weeks later, it was at 474.
Yeah, and it's almost like they're pushing the government to actually do something now. I mean, you buy Whole Foods, it's pretty apparent. I mean, you probably talked about it a lot. I mean, that's a distribution play.
Oh yeah, I love it though. That means all my steaks are going to be. I can call them up when I'm right here. We can go on my app. I'll get home. Get those steaks right there, throw them on the grill, be all set, man.
But it's like they're just pushing the envelope here with Trump in particular, and all the other things that line up to basically say that is a monopoly, to say the least. And I don't know. I don't think you don't want to bet the farm on this, but certain part. I mean, like lottery ticket style thing. That could happen, and that could you're retired if you catch that right,
Yeah, there's no doubt. Now, it's counterintuitive.
Or retired again.
It's counterintuitive in the aspect of how the administration wants less regulations versus more. Do you know what I'm saying? But guess
Right.
what? That doesn't mean a thing when all these companies are fighting each other. That's the other side of it, you know?
Exactly.
So I got the option chain up here. If you want to see something really bizarre, folks, is that you know, like when you bring an option chain up, okay, it normally brings up the prices that, you know, it could go to. And in and Amazon's place, the lowest put they have right now is $9.60. Now I can bring it.
What?
I can get more options. I'm just saying when you first bring it up. Do you know what I'm saying? No, we can get a lot more. There's no doubt about that. Yeah, exactly. But you know what's intriguing is that they even let's say so. Yeah, they're pretty expensive even right now. So a $9.82 is costing you $13, and that expires the third week. That's going to expire in like 18 days.
Yeah, I'm talking about buying something for one that might be like 9 months out.
That's right. No, you said a long-term leap. So a long-term leap, and they'll have them. A long-term leap, folks, going to be, you know, basically over a year and a half. And you know what? They're not going to be as expensive because they don't move as much. But that's pretty cool. No, I'm gonna have to look at that, man.
I like to stick it to those guys too who sell that premium way, way, way out there and win like 99% of the time, and then all of a sudden, it changes.
It's good until it isn't, folks. That's what John's talking about. And
selling naked premium, thought these guys will go out there and sell these wings way out there and look fantastic, collect the premium all day long, and then that's a dangerous game to play.
It's a dangerous game to play, and specifically, so watch how this works, folks. So this is really bizarre. John and I have both seen people blow up like this, but guess what? They don't blow up. They can have streaks that go for 4, 5, and 6 years.
Oh yeah.
And in 2 days, they're bankrupt. It's amazing, right? I mean, because I've thought of it many times, and every time I say to myself, it's amazing how much money they make. And then every time the last time they all went BK in 2007, and was just bang, 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 5 days. See you later.
God, I saw people lose like 30-40% in a day.
Oh yeah,
doing that. Large funds actually.
Yeah. Hey, well, listen, man. Great talking to you again. Look forward to, of course, talking to you, and we're gonna be growling and prowling, man.
Absolutely.
Thanks,
good to see you, man.
Hey, listen. Okay. How are the chickens? Did you eat them yet? Oh no, they're for eggs, huh? They're for eggs.
You want to hear something?
Stay right there. Stay right there. We're coming back. We're gonna have a farm show when we come back. Stay right there. It's beautiful.
Heard about the Tiger's Den, but wondered what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Talk about Mr. John Logan. Talking markets. Now we're going to talk about, John is in beautiful North Carolina. And when we talk, what, did I lose him? Oh, we got to get him back. Oh no, we got to get him back. We'll see. Okay, so hopefully we'll get him back. We get him back. We're gonna talk about what he's been doing down there in North Carolina, because I got to see. Well, all the Tigers got to see when he was getting his getting all the chickens going so that he could have all his fresh eggs. And then when I was talking to him the last few days, he was out in the. It wouldn't be a pasture, out in the farm, getting all the fresh vegetables. Because we were talking about, whole market. Well, he has his own whole market right there, big time. Okay, so until we get him back, let's go over and we take a look at these markets out here. So if we go into the XLF first, XLF, what the XLF did out here today, XLF comes down 15 cents. You do 57 million shares. Now, the XLF, that actually had an expansion of volume as you were coming into lower price. Yesterday you only did 51 million, did 57 today. That's saying that now it's going to try to make its way into the 23.55 area. If we go take a look at Goldman, now Goldman Sachs is one of the first financials that topped out. That topped out at 255. That topped out on March 2nd. Right now, you're trading at 219.77. And Goldman also had an expansion of volume out here today, too. We just went from 227 down to this 219 area. And 218.30, which is the highs of the lows, is going to be game now to see if there's going to be enough volume on the way down to take that baby out. The XLE... Now, the XLE, folks, this is going to be wild watching this shakeout, because the XLE is in another ABC structure on the way down. Now, the XLE, that's the large integrated oil and gas companies. If we take a look at ExxonMobil is the largest weighting structure inside the XLE. That is trading 81. Your swing low out here is 79. Chevron, second largest weighting. Chevron is trading 104, and that's laying right next to it. You're talking about 102.76. Schlumberger, that's the third largest weighting. I believe this already blew through it. Yeah, this blew through all of those. The XLE in general, and this is where this is going to get intriguing inside the physical market, and the reason being is this. The XLE took out a swing, has the volume on the move, and I can make the case here that 71.50, it's a big one. It's $6. A to B equals C to D, which puts you at 61.50. And 61.50 brings you over to approximately March of 2016. That's where it looks like this want to go. Now, that in itself is not bad. You're already at 63. What is sticking out like a sore thumb, however, is that you do have a high volume swing low at $49. That is from the January of 2016 area. So it looks to me that when we take a look at this, this is where we're going, all the way down. If we go take a look at the unleaded gas, what you're going to have out here today is, let's see, gasoline. There it is right there. So gasoline, unleaded gas trading $1.42. Whoops. That's so funny. John told us, John had to fly, folks, but he told the producers that he signed an NDA that he can't talk about the chicken thing because they're so good, no doubt. So let's go back to the unleaded gas again for a second. So the unleaded gas already broke its swing lows. That's 144. You take a look at this XB1, and we are going to have, well, we already got inexpensive gasoline, but the way that this is shaken out, this looks like it's going to go after the swing lows, which is 113 to 89 cents. And that would be just a mind blower, you know, if that's where we're going. And we had a great question in the den, and believe me, this wraps around my head too in a big way. What Duffy was saying is that with deflation, why wouldn't gold just keep dropping? And that's a fact, folks. The bottom line is that why wouldn't everything drop with deflation? You know, because that's on the boards. What I'm trying to figure out right. So picture the deflation numbers that the Fed looks at is the CPI. Inside the CPI, they exclude food and they exclude energy. I always thought that was kind of bizarre, but bottom line, they do. So when you exclude food and energy, it's like, okay, oil's going down. That means we're going to have more money to spend on something else. Food seems very expensive, even with all the commodities going down. You know, meats are still expensive. Well, foods that are good for you are expensive. Okay, you can buy plenty of grains and spend $1 for nothing, right? So if both of those are coming down, okay, then that is saying that the wage structure also would either be staying the same or coming down, because the wage structure is where inflation takes a while to come into, but once you come into, the velocity of that is pretty intense. Now, I suspect that's what the Fed is banking on. The reason being is that we're probably at full employment, we're coming close to full employment, and we'll see if that's the case. It just doesn't seem it. And as to the aspect of why would gold and the metals come down to inflation? They should. That's the reality. That doesn't look to me like that they're going to, but they should. And that very well could have to do with the amount of actually dollars that are in the marketplace going after. There's more dollars in the marketplace than there are assets to buy. Now watch that argument, because you can rip that apart in a second, because I'll rip it apart myself. So watch. If that's the case, then inflation should go. Except what happens is this, is that the theory inside inflation is that not that you have more dollars or I have more dollars and we buy an asset. What it is that we actually let those dollars go through the community, and it's the velocity of money. And this is where you go from the inequality in the marketplace right now, with a CEO making $160 million and then a worker making $60,000. Because what happens is this: if the velocity of cash does not go through the marketplace, you will not get inflation. If you have $100 million and you just keep buying for yourself, that's not inflation. You just get more. Inflation comes when everyone uses that money and is not running scared and puts the money across communities. The community's not scared, gives it to the next person. It's the velocity of cash. And we still evidently don't have the velocity of cash going through. And I can kind of see why too, you know. So that is going to be the $64 question, and I expect that's going to be the question here for probably the next 6, 7, 8 months. You stay right there, folks. We'll be coming right back. Dow Industrials down 12, NASDAQ up 2, S&P's down 1.5. And don't forget, folks, get us right on your cell phone, TFNN.com, hit Tiger TV. You stay right there. I'll be back for another 10 minutes, and Andy Hecht is going to be coming right up.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. So this is going to get intriguing. So last Friday, folks, we had option expiration. Summer. Normally, you don't have big volume on Mondays or Fridays. We had huge volume last Friday. Well, guess what? We're going to have huge volume again tomorrow. Tomorrow is the annual reshuffle of the Russell indexes. Okay, so this is a big number. So Friday's session will probably be one of the, I'm reading an article from Bloomberg right now. Friday's session will probably be one of the busiest of the year for equity traders as the annual Russell reshuffle is set to take effect. The Russell rebalancing of stock indices reliably boosts trading. At the same time, it really triggers price swings in the market. Last year's adjustment, which coincided with the Brexit vote, helped fuel a jump in volume to more than 15 billion shares. The highest total for the year. In 4 of the last 5 years, Reconstitution Day, that's what it's called, ranked in the 10 busiest trading sessions, data compiled by Bloomberg said. Since 2008, the S&P has moved more than 0.5% on the day of rebalancing only twice, in 2011 and 2016. The transition at the end of the day on June 23rd should be an easy one. Yeah, sure it will. I doubt it's going to be an easy one, folks. We'll see. Russell rebalancing gives small cap market a bit more liquidity and trading volume. We could see some swings in performance from a handful of individual names. You are going to see swings, folks, okay? I've been in the middle of a few of these, and as we come into the close, you are going to see swings in an incredible way, because what the rebalance does is that they're selling some shares, they're buying other shares, and everything they're buying and selling, folks, you need a buyer for one, you need a seller. If there's a seller, you need a buyer. when there's a buyer, you need a seller. That's the bottom line. So that being said, I want to take a look at this. So we had today is that you have the IWM, the small caps. And it's going to be all the Russell, by the way, not just, I just pulled up the Russell 2000. So what we have here is that it tried to get to a higher high today, couldn't handle it. So that's saying that we're going to have basically be running down to like 137.81. If I actually take up the index and look at the index. Okay, so the index right now is at 1404. Failed the whole price today. Yeah, this looks like it wants lower price. Hey, we'll see where that shakes out, but you can expect we're going to get some volatility in that tomorrow. And you very well can get down to this 1386. We got the 1396 today. 1386 is the low from the swing of the week of June 9th. That's how that's set up. If we go overseas and we take a look at the Nikkei for a second, why the Nikkei? Well, if you're in the metals market, folks, you want to know what the Nikkei is doing, what the yen is doing. Last night, the Nikkei, there she is, Nikkei came down 28 bucks, and we're at 20,110. It looks to me like it's going to get into the lower range tonight, which is 19,989, which would be great coming into a Friday, because that's what we need. What we need inside the metal market is we need this yen to get stronger. Yen gets stronger, gold gets stronger. Right now, you're trading at 111.32 to the U.S. dollar. And when it gets stronger, it would be going down to 110. Well, it's right at resistance. You know, it doesn't look. This is going to move around quite a bit tonight. That's what it looks like. When you do take a look at the aspect of how the Nikkei is trading, the Nikkei looks like it wants lower price, which would dramatically help our markets. Metals market, that is, get higher price. And if we do go back over the U.S. dollar, bottom line is that you had big volume in the dollar today, and you had no movement. And you're not at a swing high. The swing high is 97.515. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great one. Have a safe one. Stay right there, man. Mr. Andy Hex coming up next. Remember, right on your cell phone, TFNN.com. Hit Tiger TV. You're going to get some great HD quality audio and video. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.